All right, hello students who are taking financial accounting, and we are working on the Chapter 2 exercises, Group B, the ones that were assigned in the digital study guide, problems 2-23B through 2-30B. Okay, so I will be just working through the problems, and I won't be spending so much time in a lot of the explanations unless necessary. A lot of this stuff in these problems have been already covered in Chapter 1 and in the theory videos for Chapter 2, so I'm just going to start working through them. And of course, it's going to take several videos. Notice that this particular exercise says 10 to 15 minutes. Well, that means I'm creating at least, it's going to take me longer than 10 or 15 minutes, because if I was working by myself without making a video, I'd probably get through them a lot quicker, but we'll see how long it takes. So just realize that you're going to have quite a few videos here. Right. Anyway, so the following are 6 journal entries KLP Engineering made during the month of April. The requirement for each transaction shown: determine the accounts affected, the type of account, whether the account increases or decreases, and whether it would be recorded in the journal on the debit or credit side. The first transaction has been analyzed for you. So really what they're doing here is they're making a journal entry, but they're adding in the type of account and whether it increases or decreases. Okay. So I'm going to work through them as just basic journal entries, and then add in, so that you see what the journal entry looks like if you were making it into the journal, and then I'm just going to add in the additional information. So April 1, of course, you have to put the date. It says paid advertising expense. Well, I'm affecting cash because I'm paying the advertising expense. So if I'm paying money out, cash is an asset, and my cash is decreasing, so I decrease the cash on the credit side. So I'm going to have a credit to cash for, I'm going to have a credit indent here. Okay, that's why I erased a credit to cash for $340. Okay, and what am I paying? I'm paying the advertising expense, so my debit would be to advertising expense. And of course you'd write that out, but I'm just abbreviating to get through the work. So that's $340, and that's what my journal entry would look like in the proper formatting. I'd have a debit column here, and I have a credit column here. Okay, I have flush left here, like I said, indenting here. Okay, and of course I put the date. Now, advertising expense, that's an expense account, and obviously I'm increasing it because if my balance, whatever my balance was, and now I have an additional 340, that means I'm increasing it. Okay, and then my cash is just the opposite. I had this as my balance in my cash account. This is I'm paying it out, right? I'm decreasing it by $340, right? And of course, since cash is an asset, that's the type of account. So when I decrease my cash, I credit my cash because we decrease our assets on the credit side. So that's how they did this first transaction. Now, April 3rd, the date, it says paid $7,800 in cash to purchase a new piece of equipment. So am I affecting cash? Yes. Is my cash increasing or decreasing? Well, it's decreasing because I'm paying out $7,800, so I'm going to have a credit to cash for $7,800. Okay. If I have debits have to equal credits, so if I have a credit, I have to debit something else. Well, what am I going to debit? It says I'm purchasing a new piece of equipment, so I'd look at my chart of accounts, and of course I'd own the equipment, which is an asset. And when I look down through those accounts, I'd find an equipment account. So I would end up debiting the equipment account for $7,800. Equipment, like I said, is an asset, and cash is an asset. Okay, and of course, with my equipment, I would have had a balance here, and since I'm buying the equipment, that means I'm increasing my equipment by $7,800. And for cash, right, I'm paying it out, so that means I'm decreasing my cash by $7,800. That's the journal entry for that transaction. Get accustomed to making these journal entries, right? It amazes me that when I see the entry, for an exam, like the final exam, and they have to make journal entries, as part of the final exam, students can't make the journal entries in the proper format. If you're doing the homework and you're making the entries, do it the right way, so that becomes the habit, okay? The next transaction is for April 5th. And it says issued common stock in exchange for $18,000 in cash. Okay, so am I affecting cash? Yes. Is my cash increasing or decreasing? It's increasing. So I increase my cash on the debit side. So I have a debit to cash for $18,000, and that means I have to credit something else for $18,000. And what is that? Well, it's common stock, which is an equity account. Cash is an asset account. And so here was the balance in my cash. I'm receiving $18,000, so my cash increases in $18,000. And before I had this much in common stock, and now I'm issuing additional common stock in the amount of $18,000. So my common stock is increasing. Okay. So that's the journal entry for that particular transaction. Notice I didn't go through proving why my credit to common stock is a credit to common stock, right? You want to see the proof. When I make my journal entries, most of the time I'm backing into the other half of the transaction. You can prove it, as a double check by going through the theory of it. And again, you can see that theory in the introduction videos on how to make a journal entry. Okay? Right, so 4.9 is my next transaction. Borrowed $12,000 on a note payable from the bank. Okay, so if I'm borrowing $12,000, am I affecting cash? Yes. Right. Why? Because my cash is increasing. I didn't have cash before, and now I'm getting $12,000 more in cash. Okay, so if my cash is increasing, I'm going to debit my cash for $12,000. And since debits have to equal credits, I have to credit something else. What am I going to credit? Well, I'm going to owe my note payable, okay, for $12,000. So that's the journal entry. So if my notes payable was this amount before, and I'm borrowing an additional $12,000, that means I'm increasing my note payable. Okay. Next transaction. $412. Paid monthly phone bill, $280. Okay. So am I affecting my cash? Yes. Is it increasing or decreasing? Well, if I'm paying it, I'm paying out cash, that means I'm decreasing my cash by $280. Well, if I decrease my cash, that means I'm crediting my cash for $280. If I credit something, I have to debit something else. Well, what is it? Well, what am I paying? I'm paying a telephone bill. So most likely I have an account called telephone expense, and that's for $280. Okay. If you look at the solution, you'll see that the solution, instead of having a telephone expense account, it has a utilities expense account. Okay. That's the account that they're using. Now, what you're doing, I didn't look at the solution when I wrote telephone expense. It just comes in my mind. Most businesses would have a telephone expense account, but some businesses do group your expenses, your utility expenses like gas, water, electric, telephone. They group them all together and call it a utility expense account. If you're in a business, you would have a chart of accounts, okay? And when you're making that second half of the journal entry, remember you're looking at your chart of accounts, and you're seeing which category that transaction is most closely related to. And in this case here, it was an expense account. So I would look down through that listing of accounts to choose the most correct account, the one that you use for those types of transactions. Okay. Now, granted, if the business has been in business for a while, you could have went and pulled out the telephone bill and see how that particular transaction was recorded, or what they call coded, okay? And then you would have just basically copied that, all right? So in that case, you would have seen that the telephone, you would have seen a utilities expense account, and that's what you would have used. So if our utilities expense was this amount before, and now we're paying the bill, that means we incurred an additional $280 in expense, so that's an increase for our telephone expense, or for our utilities expense, I'm sorry. Okay, and next for 17, we're purchasing supplies and we're paying cash. Okay, so are we affecting cash? Yes. Okay, is our cash increasing or decreasing? Well, we're purchasing supplies, so we're paying out cash, so it's decreasing by 165. When we decrease our cash, we credit our cash, in this case 165, and since we credit something, we have to debit something else. Well, what are we debiting? Well, we're purchasing supplies. I can look on my chart of accounts and find that supplies is, purchasing supplies, that's something I would own. So underneath the assets, I probably see a supplies account. And so I would debit the supplies account for 165. If my supplies were this amount before and now I'm purchasing more, that means I'm getting more, so I'm increasing my supplies by 165. Okay? And just be aware that you have to think about, it's one thing to just look at what the written transaction is and say, okay, I'm going to choose supplies, okay? But, I'm pointing this out because with supplies, okay, you might have a supplies account and you also might have a supplies expense account, okay? And so which one do you choose? Well, that depends upon the nature of the transaction, okay? If I'm buying supplies to resell them, well then I'm going to own those supplies until I resell them. But if I'm buying supplies that I'm using in the operation of my business, well, that's going to be supplies expense. So you have to think about the context of the transaction to determine what category you're going to look at and then choose the proper general ledger account. Okay. All right, so we're done with that. Even though I gave a little speech in the beginning, we're at 13.5 minutes. So I'm going to be finished with this video, and I will pick up in the next video with 2-24.